morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, November the 20th. What a day yesterday in the markets. Dow up 207 points, NASDAQ up 62, gold actually rose up 9, and dollar fell, of course, inversely correlated to the markets, down 24 cents. S&P up 27 handles. Amazing day for the markets. We kind of showed it on the morning call video yesterday that we had a nice little bullish reversal day on Friday. Today, yesterday being that very big day if we could get some follow through. Sure enough, the problem is that if you're a short-term trader like myself, very hard to get involved when the markets gap up that hard. Usually they consolidate pretty much all day and then have a small little rally into the close. And that's exactly what we have. I'll show you in the charts in a moment. But nonetheless, a really good day. Couple of key factors. Got a lot of bullish points here. We are coming into seasonal strength, as you know. The week following Thanksgiving and the week after Thanksgiving usually have a bullish bias to the upside. Despite that we were in a downtrend, we are still in a downtrend. Please keep that in mind. 1425 in the S&P cash, the SPX, would negate the downtrend and put us back up in an uptrend. So that's a number that I'm really looking at. Friday's low will continue to be a main pivotal low. If we break that, I think all bets are off for the upside for a while. But I also mentioned about the shorts, guys that are shorts. I know plenty of people that are short, looking to have this ride this little bounce up. The only thing about that bounce from yesterday, there was definitely short covering, but I could see in volume definitely convinced and or confirmed this move up yesterday. So where do we go from here, right? And I always say that. Well, right now we're still in a downtrend. We got to really take out that 1425. I do see us consolidating probably today. After a big move, we usually consolidate, not giving back much gains at all, if any at all, if at all anything. Then I would say we are going to probably push higher on Wednesday, and then probably a little push early on Friday. Now, we really have a day and a half of trading, if you really think about it. We have all day today, pretty much a half a day for Wednesday, even though we are open all day, but we have probably the morning session. And then Friday, really, there's not much going on at all. I mean, if you really think about it, I would just take the day off as well. That's what I'm doing, is I'm off on Friday. It just makes no sense to come in and trade unless you have really a bunch of big positions that you have to monitor. It's really wise to take the day off. Most big players, traders, hedge fund money managers, they're all taking the day off, if not the week. So just keep that in mind. Take a look at the economic numbers, our data out here, and what we have here. We have housing starts, building permits today, and then, of course, we have the mortgage index, and then the initial jobless claims on the 21st. So not much. Friday we have the crude inventories, leading indicators, Michigan sentiment as well. So we'll have a little bunch of data coming on Friday morning. But just keep that in mind. Kind of light on the data, which is really to be expected. So now let's follow up on some of our indicators that I had mentioned. I put a lot of these arrows to show you when we get to the S&P that are above the 50-day moving average. And as you can see here, really marks some pivotal market bottoms here, right? We had this, obviously, 2011 in August. We had, again, one in December. We rallied really hard. We had one in June, this just past June. We've rallied since June back up to September, and now we're coming in here. So we're actually, is this a rally that we're looking for? Possibly. Again, it's still early to say. I wouldn't look to go out and start putting on some positions on. My guess is that this could be a start of the Santa Claus rally, of course, with a little bit of a pullback. I'd like to see a 38 or 50% pullback of yesterday's candle, make a higher low, and then look to buy stocks aggressively into the end of the year. Now, remember, things can change. News does trump the charts. Okay, so just please keep that in mind. I would not be looking to buy up here. Believe it or not, we are already overbought in the short-term charts. So, again, that doesn't mean that it's a sell signal, but just please keep that in mind. We rallied so hard, so fast yesterday that our short-term charts put us in overbought state. Okay, where obviously our daily charts are not. But just please keep that in mind. So a little bit of a pullback to make a higher low would be healthy. So look at this. If you're not looking at this on a daily basis, you should be. Stocks above the 50-day moving average, and you could also look at the stocks above the 200-day moving average. But these usually, anything below that 20 percentile, usually marks the market bottoms. And we got there on Friday. So please, this is a real good indicator to look at. Okay, now let's take a look at copper. Remember I mentioned copper really not doing it? Look at the explosive move yesterday copper had. Validating the move in the markets. Very important. This is a great move in copper. Now, should it come back into this area, maybe 350, right? Maybe back test that 20-day moving average, and then have some momentum to break that 355. Remember, we have some overhead moving average resistance at the 50 and the 200-day moving average. Still has a lot of work, but very good sign, guys. Very good sign for a Santa Claus rally if you're a bull, okay? If you're a bull. And let's take a look at let's take a look at the VIX first. The VIX was telling, right? I mean, the VIX has been really weird looking at it. I do look at it just to see, but when we were selling off, we should have been up in the 20 handle. Now, this just really validates the move higher, right? Because if it never really rallied, we didn't have a lot of fear. So this move brought us right back down to that $15.5, $16 area. So another good sign, bullish sign for the markets. Now let's take a look at the dollar. And I've been mentioning about the dollar, big move up. We're into resistance. Probably a pierce back up here and then fail, and that's exactly what we have. And that is really one of my indications when I do dollar analysis. And I look at the dollar, and as we know, it's inversely correlated to the markets. So I say, okay, what is the dollar doing? Dollar is king. What is the dollar doing? So if the dollar is rallying, you're not going to get much of a move in the equity markets and commodity markets. But when the dollar is at major resistance in these two resistance bands, then I'm saying, okay, we're going to have a big move. And I've been saying that all week last week, but we needed to wait patiently for that move to come. And when we had that reversal, it really doesn't matter what it is, whether it be the congressional leaders talking about calming the fiscal cliff issue on Friday. And that really what put the markets in reversal, right? 11:30 on Friday, you can look at the charts, we reversed. And that actually followed through from yesterday. And it really doesn't matter how it's done, long as the technicals follow, and sure enough, it does, right? So as you can see, we had that big reversal, big engulfing candle. Now we're sitting on support, the 200-day moving average. So that's going to be, and the 20s below that, and the 50. So a lot of support area to break lower, but it's a good step in the right direction for a move higher in equities and commodities come year end. Let's take a look at the weekly, and then I'll run right into the charts. Again, weekly bar, obviously it's only Monday, but we're still in this channel. I like to see this break below this upside channel, or wedge, if you will, by the end of the week. And then we could really get some momentum going and maybe get a test back to the lows here at 78 and a quarter in the dollar index. All right, now let's take a look at the 10-minute chart. I like to just show this to you guys on a regular basis just to see what we did. As you can see, we gapped up and we stayed there. See, we literally all day around 138.60, we just stood there and literally chopped around all day for that last push higher. Now, this validates that move. I like to see dollar strength market strength into the close here. That means the bulls are not afraid to take profits. This is a very good sign, guys. Now, also, you're going to have some short covering, probably shorts waiting to the end of the day, and that's typical. Please don't do that if you are trading. It just catches everybody by surprise. If the market fell in this area here around lunchtime into 2:30 and held that 20-day, why does anybody think that the market's going to sell off at the end of the day? It's just not going to happen. It used to many years ago, but not anymore. So if anything, that 20 and 8-day and that 20, that 8-day moving average usually is my momentum indicator I like to look at, following price, and then a 20 below that, and we didn't break the 20 all day. There's no reason to hold the short into the close just to really get hurt at the end of the day. So anyway, big move up at the end of the day, validates the move. I like to see that, but again, very, very quiet. If you came in long, you did fantastic. If you were flat, you really didn't do much yesterday. Not much was moving because the move was already made for the day. Take a look at our ATR, simple S&P 500 chart. Back up into this area here. I like that. I'd like to see this now start to roll back down and equity markets move back up again, but really good sign, very good sign. Take a look at our S&P 500 cash. Beautiful, big candle. recoup the 200-day moving average. Excuse me. Again, our indicators are still oversold. Stochastics are just kind of moving, starting to turn up again. I like to see us break above the 20, and our MACDs has a lot of work to do. So I see a lot more chopping around here before we really get up. But again, 1425, guys, that red line in the sand here, that's going to really put us back in an uptrend officially. That does not mean we have to wait for that to get long, but just keep that in mind. The 20 is coming down, still rolling over. The 200 is starting to flatten out a little bit, which I like. That's a little bit not a bad sign. But if you could see, remember that 61.8% retracement, that volume profiles, heavy support here. Sure enough, boom, we got that bounce that we're looking for. So now I like to see a little bit of a back test, maybe to that 1374, 1372 area, right up in here. That'll give us right to the 50% retracement, and then start to move back up again, work its way higher. And that'll probably be more of a grinding price action move up into this area here, and then we'll reevaluate it. 1400 is going to be really big, and it's going to really test any type of uptrend here. Remember that 1400, because I think they're going to get a lot of sellers come back into the 1400, 1425 area, and it's going to be tough to get back above price. But if that does happen, then we can have a real good end of the year. I do think longer term, I think the market still has a little bit of selling left before we can move higher. But again, that's longer term, and we'll reevaluate it as it comes. Spiders, like to show the volume. Now, the spiders here, spider volume, as you can see, really wasn't as big as it was on that really move yesterday. But nonetheless, we did have well above average, as I'm looking at here. If you can look back the volume profiles. Again, stochastics needs a little bit rolling, and it's the same thing with the MACDs. But nice move up, real nice move up, recapture the 200-day moving average. Very bullish. Transports, nice big move in the transports. Now, this is another sector with copper. All right, so you can put these all together in your format, and you could see which of these indicators are moving. And with copper moving, the transports moving, dollar moving lower, market moving higher, commodities starting to catch a bid, that's all a good bullish sign that we're going to have a Santa Claus rally at the end of the year. Now, remember, everybody's expecting a Santa Claus rally, as it is every year. So keep in mind, when you have the pundits looking for it, sometimes it does not happen. So that's something that's a little concerning to me. But nonetheless, we're going to follow what the trend says. And Dow Jones, the Diamonds ETF, same thing here. This one had a really nasty sell-off down to the 76%. Recouped the 61.8%. 200 is way back above there with the 20 crossing. So these moving averages are still rolling over here. So a lot more work to do. But again, constructive day yesterday. And IWMs, this is another sector that I'd like to look at for risk. Big gap up, big move higher. Nice volume here, above average here. Usually our average is right around 32 million, 43 million in the average. We have a stochastic crossover. MACD still has a lot of work to do. However, constructive. Again, another good sign for a market reversal. Apple, big key factor. Apple, to me, drove the market higher. We had our analysis pretty much pinned all the way up down here. And if you recall, I said 522. If you're trading Apple, depending on your risk, 518. Not only did we break 518, if we said 518, we're going to go to 500. We almost got there within 4 points of a $500 stock. That's pretty good work. Then we recapped that. Now, a lot of guys actually bought that back on Friday, which is hats off to you guys. That's great. And big move yesterday. So if you held that, and if you had the options, which a lot of guys were trading, you got well rewarded. Up $37, 7% on the day. Big move. Congratulations. Anyway, Apple, I think, has a lot more work to do. Big move yesterday. Usually we get a little bit of a pullback, consolidate. Maybe 38% of that candle, somewhere around the 550 area, 545. And then we want to see Apple start working its way back up and breaking these areas of resistance. But nonetheless, a great day. That's going to follow the Qs having a great day as well. And as you can see here. So, again, nice day. 1 day does not make a trend. 2 days does not make a trend. But we are getting some nice big moves back up here. Don't forget, we're deeply oversold. So a lot of it had to do with some short covering going into yesterday following Friday's reversal. Okay, so just keep that in mind. All right, guys, have a great day. And we'll talk to you tomorrow. Take care.